How do you set up a charitable trust? Have you ever thought about how you can support your favorite charities while also planning your estate? Setting up a charitable trust might be the perfect solution for you. Let's break down the steps involved in creating one. First, you need to determine the type of charitable trust you want to establish. There are two common options. The first is a charitable remainder trust. In this arrangement, you transfer assets into the trust, which then pays income to you or your beneficiaries for a set term or for life. After that term ends, the remaining assets go to the charity you choose. The second option is a charitable lead trust. This trust pays income to the charity for a set term, and afterward, the remaining assets return to you or your chosen beneficiaries. Next, you will need to select the charitable beneficiaries. Only organizations that qualify under Section 501(c) 3 of the Internal Revenue Code can receive funds from your trust. You can choose one or more charities to benefit from the trust's income or remainder distributions. Once you have decided on the type of trust and the beneficiaries, the next step is to draft the trust agreement. This legal document outlines the terms of the trust. It should include the purpose of the trust, the charitable beneficiaries, the term of the trust, and how the assets will be managed and invested. Remember, for a charitable remainder trust, the agreement must be irrevocable, meaning it cannot be changed once established. After drafting the agreement, you will need to fund the trust. This involves transferring assets such as cash, securities, real estate, or business interests into the trust. It is important that these assets are formally transferred so that the trust holds legal title. You will also need to obtain a tax identification number for the trust. This number is necessary for tax reporting and for opening financial accounts in the name of the trust. Next, you will want to open trust accounts at a bank or credit union. Financial institutions will require documentation, including the trust agreement, tax identification number, and identification of trustees. Many banks and credit unions offer trust administration services to help manage the trust's assets. Finally, managing and administering the trust is crucial. Trustees are responsible for managing the assets, making income payments to beneficiaries, filing tax returns, and distributing the remainder to charities as specified in the trust agreement. Setting up a charitable trust can provide tax advantages, such as income tax deductions and the removal of assets from your taxable estate. However, because charitable trusts are irrevocable and involve complex tax rules, it is wise to work closely with legal and tax professionals during the setup process. By following these steps, you can create a charitable trust that supports your philanthropic goals while also benefiting your estate planning.